Hey, it's Mack with PriceActionTradingSystem.com. It is Thursday. It's March 3rd. This will be our chart lesson for the day. This will be our last one for the week. Most likely won't be no chart lesson tomorrow. I hadn't been doing them on Fridays for a while, and that'll probably continue. I kind of like having the 3-day weekend and leaving early on Friday. So um, anytime I'm around here, if I hang around, I may do one. But otherwise, probably won't be many on Friday going forward. But anyway, let's talk about today. Um, we had this move down, nice two-tiered channel. We had a break, a new low, and then we reversed and it went forward, went higher. We kind of went sideways here, and notice that once we broke higher, if you measure this and look for your target, we got a perfect measured move on that, based on that lower part of the range here where we're just kind of going sideways. Um, and we did get the break, and then we moved to a new low in the reverse. Somebody told me they really got confused after this. Once you get that break and that new low in there, um, it's not surprising to get, you're definitely going to get a correction, and it's not surprising that you got a reversal like this. And um, you really shouldn't get chopped up on this because it's making higher highs and higher lows really all the way. Then you get an overshoot of the upper side of the channel here, which generally will lead to the break of the trend line. And we did get a break, moved to a new high, and then we just kind of corrected here. And all this did was that we just got a steeper channel going higher here. And you know, you would expect to get a retest and then maybe a correction, but it didn't happen in this case. It just went higher. So, um, and another thing, once we bounced lower here, we were kind of acting as a range here, and this support's really holding strongly. So, where would you expect prices to go from here up to here? So you should be looking for longs up to here unless you get something that tells you different, but you never really get anything different here. It's a little bit choppy, but it's a fairly tight little channel going up there. So I'm not sure. Now, actually, I would say from about 11 o'clock till about noontime, it is mostly sideways. I could see if you didn't understand what was going on, how you could get chopped up right in here. But if you understand what's going on, you should know what's happening here. There's no shorts that really set up. You might have considered going short here, but it's usually better off to wait on a second entry, and we never really get that. Instead, I like this for a long. Because you get a failed second entry short. I guess you could count this as a second entry short. So, and you could treat this as a failed break higher too. So really looking at that, I could see somebody taking a short there. It would have worked, but I like it to the upside. Um, so I'm going to go ahead and circle that one now that I look at it in that light. Um, So I think you could just reverse right there. It's hard to take a short and then take a long, or take a long and then instantly take a short. Those are difficult trades, but they're there all the same. So, but you got to be really good to switch gears like that. But let's back out and talk about the trades now. We were working down when I came in. Um, the first trade, it was almost 8 o'clock, I believe, before the first trade really set up. You can see that yeah, that's about 8 o'clock. You might have considered a short right here. Notice you got a new high, and it pulls back first entry, pull back second entry, and then it turns back down. So you actually could have entered there. I believe I was a little late, so that one, yeah, that's still at 7 o'clock. So I'm gonna go ahead and um, circle that one too. That one does set up pretty nicely. So you got your first entry there, and that's a failed second entry long. It probably doesn't really fail. I think it gets 4 ticks there. It's real close, but you can still treat that like a failed second entry long. And you're looking for prices. You got this first leg down right here. So you're looking for a measured move at a minimum, and that puts you right down into here. We actually went further. We went lower than that. So you're looking for prices to go down. But now you've kind of got a double top here. this out of the way. And you try to go higher again, and that's like a third test of that. It looked like it was going to be, it looks like a spiking channel, and it really, you could treat it that way um, as a spiking channel. And if you copy this line right here, you can drag it down, and it fits real well. So you could have looked at that like a spiking channel. So that's like your confirmation, your third touch of the trend line. So I like that one. And really, you could treat that almost like a failed second entry long as well. It's a form of a trap there. And then it tries to go higher again and fails. And again, you probably could have entered here as well. There's actually a couple of entries there. This is somewhat of a, I would have been treating this more like a midline here though. So you had to kind of be a little bit concerned about that, but you're expecting prices to go lower. The only reason I don't like the next one here is because it's not a great signal bar. This is a pretty nice signal bar. It does make a little higher low there, but that's not a very, it's more of a neutral signal bar, so that's the reason I don't like that one. And if you hadn't scalped out any of these, I like these for add-ons. And then you also could have looked at this like a little bit of support right across there. And so notice when we break lower, it pulls back. It's like a breakout pullback short. And it comes down right off that trend line again. And there's enough room to get out before here. So I like that one. The only reason I circled it green is because it's a first entry on a breakout pullback short, although it does break higher and turn down to give you a really bearish bar. And we are looking for that measured move. And another thing, once we started going lower here, I would measure this leg right here and look for a measured leg there, and that's a perfect measured move to the tick. So that's a shorter term way to measure that one. So I like measuring it that way too, and that one, like I said, is perfect measured move to the tick. And so that might have kept you in this trade a little further than your original measured move from here, and measuring this leg from here to there. But this one, because it's a first entry, I made it green. You've already gotten 3 entries, and you should have scalped out of them. You wouldn't have any runners going, so you'd be out of these 3. But if you entered here, you wouldn't have got a runner either. There's actually another pullback here and another chance to get in, but that's right into that trend line right there. And I wasn't sure if we'd break lower. I wasn't sure if this was just like a spiking channel or what at that point. So you kind of just had to be real careful about entering this one right here. I just don't think it was worthwhile. So, okay, sorry, I had to pause it just a minute. My battery on my wireless headphones were going down. I had to plug that in. But anyway, it turns out to be a nice trade, but you don't know that at the time. And if you're following the rules, you probably skip that trade. If you want to be aggressive, you probably took it. So, or not that one, I'm sorry. Well, yeah, the same thing there, but you definitely, this one, I just don't even like, I don't even think it's way too aggressive because of that possible scalping, spiking channel right there. Then, of course, we bounce down here, and we got a little trend line working up. We get our first close outside. We try to go higher once. You actually get a second entry down here, but you've already moved so far that now you got to be still concerned with the downtrend that you probably don't want to take that long. It is a little bit away from the EMA, but it's not extremely far away from the EMA. So, and there is a little bit of a trap there too. So I probably should make that one green. It's a little bit aggressive, but and now you're working up. You get a break. You tried to go higher twice. And failed. You've really got a double test of this high here, and you're in a downtrend, and that's a big bearish bar, so I like going short there. Quick, easy move, and of course we bounce down here again. So now this is starting to look like some support down here, but again, it's not a very good setup to go long. I like waiting until you get this pullback right here. This is like a double bottom pullback with a higher low and a nice reversal bar. So I like that one. just to come back up to the top because it's looking like a range now. And you figure we just came off the bottom. If this is indeed a range, we're headed back to here. So I like entering there on that trap and going higher. And you figure it's probably going to stall right here, but it does. It pushes on through. It comes back and tests the high once, and then it comes back and tests it again, and it does confirm that trend line. This is not a perfect signal bar, but I still like this one because this is what I like on a breakout pullback. You get a second attempt. You've tested a couple of times, and it holds. And if it wasn't for the uptrend here, I would say I wouldn't take this trade without it being a perfect signal bar. I'm looking for almost a perfect setup on a breakout pullback type entry. And I had that conversation with another trader this morning. They fail so often. Generally, your best bet is to fade a breakout because they fail so often. But in this case, you had the trend line and the confirmation of it. So you had some different things going on here. So in that case, I like this one being blue. Otherwise, I probably would have made this one green or skipped it altogether. So, but notice this is a double bottom. Then you pull back first entry, pull back, or actually you're moving far. Then you get a first entry short, pull back second entry short, and so that's a failed second entry short. I like it. We're not back to the trend line or the EMA, but this could be one of those runaway trends again. And so with a short trap, you probably got some short strapped. I like that one. It's an easy scalp. You don't get anything more out of it. And notice what happens. You get a break of this channel here, and you pull back, and you get this entry right here. The reason I like this second entry is because if you saw the channel and you saw the measured move to the tick, then you really are looking at this being a channel now with this being a midline. And so where we're going to go from here, we're going to probably at least go back to here and maybe all the way down to here. And this is actually a failed second entry long. Look at this high, pull back first entry, pull back second entry. It's not a good enough entry to go long, and there actually is a shorter term possible trend line right there. There's a shorter term little correction. And you would expect a retest of the high here. So if you'd had a good second entry, you might have gone long, but it's not a very good setup. And then you get that reversal bar. I went back and forth. This one is real close to being green. The better trade is waiting for it to pull back here and then go short, because now you've got another attempt and another big bearish bar, and you're below the EMA. Here you're still a little bit above it, but notice how that shot down and went straight through the EMA. That's your first clue. Hey, that's what a reversal pattern starts out like in a lot of cases. But I like this because it was a lower high off the range, and that's what you want, looking for it to go the other side. And if you took this trade, not only do you get to go to here, you end up riding this all the way to the other side. And I would have looked to exit right here, because it could have gone on through, but look what you get out of that. If you entered here just by getting out a tick or two in front, you got 6.5 points, and so it's probably 4.5 or so from there. Let me get that out of the way. If you'd entered on this second entry, counting off that high there, because there is a swing right in there, so this is a new swing high. So there is some support there, but you're below the EMA, and this is a range type day, so you're going to see prices swinging back and forth, and you're probably going to test this at a minimum and maybe down here, because that's the way ranges generally work. And guess what? It bounces down here. It's tempting to go long right here, and you probably could have, but notice that you got this trend channel, this little channel working down, and you don't have, that's your first break of it. So you got to be careful going long right there. Even though you're a good bit away, it could pull up right there and turn down and keep going. So you got to be real careful. And you get a second entry short right here, but it's right into a possible trend line and right into this low. So I think you got to skip it. But when you get the failed second entry short, I like that to the long side. That's a nice reversal bar. I would say that that's a really big bar, so you might wait on you might let it break higher and use a limit order, and you could have gotten filled pretty far back in this thing, all the way back down to here by waiting. But I'm actually okay with you putting a stop right there and just hoping, looking for it to go higher. And it actually bounces again right off that trend line. I don't like entering again because it's starting to go sideways here. So I wouldn't add on to that one, even though it would have worked. I think you're better off to wait. And then it pulls back. You get a first entry again right off the trend line, but again, it's a bearish bar. And but the trend line's working up, and this is where you can tell some people got trapped here to the short side. They went short right here, and look what happens. When you see a big sudden burst up and it overshoots the top of the channel, it shoots right through that midline without getting any real resistance. That's because all these shorts that got people that got short here had to exit. They realized they got fooled. So I don't know if that trader that sent me an email saying they got chopped up in here, maybe this is where they got fooled. You might have been looking for the retest of this low, but you got to wait for this little trend line to play out, and it just hadn't played out yet. Um, and you don't really want to go long without a good long. That was the only good one I saw in that whole move right there until it comes back again. And you still hadn't had a break, and you get this big reversal bar. But again, that's a huge bar. It's almost a repeat pattern, kind of what you saw back here. Let it break higher and drop a limit order in. And again, you could have gotten filled all the way back to here. But even if you use the stop and you put your stop below the signal bar, which is right here, you could have hung on to that trade. So, but one that big, I would probably use a limit order. And the only problem is sometimes you get left behind. And you see it wasn't long before this thing did rocket off. And you don't want to get left behind on at the wrong time. So, but notice we get a break here. By the time you can enter, it's right back up here at the highs. It does make a new high, and we talked about this a minute ago. It's a second entry short. It's a failed break higher. There's some reasons to like that short. I was kind of hung up on the longs at that point, although you are starting to look for a short. I would have been waiting on a second entry or a lower high or something, and that doesn't come. Instead, we get the failed second entry short that bounces. So I like that one to try to for a trap, and you can tell it was a trap by how it rocketed up again. It's almost a repeat pattern of all this happening all over again. And of course, draw that trend line. You never know. And sure enough, it comes up here, pulls back, and if you copy that and pull it up, it fits right across that high. All you would have had was this at the time, but you can see where it touched it a few more times. So I like this one because this is a double bottom, so that's a first entry, pull back. And even though it's really a second entry there, you can still treat this is like all one move across here. We're just kind of going sideways and it drops on down. That's probably a little complicated. I don't want to confuse people, so technically that's not a second entry short, but you can still almost treat it like one. It's just a bounce off the EMA, the trend line, and it's a breakout pullback too from this level here. And so it's a breakout pullback, and plus you've got some matching lows across here, so it's like a little failed break lower. So there's a lot of different reasons to like that one to the long side, even though it's only a first entry. I still like it because there's just so many different reasons to want to enter there. You can see all those closes right across there in that little failed break lower. And you're looking for prices to come back to here at a minimum. Of course, it just shoots on through. I'm guessing we trapped a lot of people here again trying to get short, trying to pick a top. It shoots on up, and we got a channel working higher now. And then you pull back, first entry, pull back. There's a second entry there, but I don't like that one. I'm sorry. There's a second entry here, but it's not a very good signal bar. It's a bearish signal bar. And then we kind of just go sideways. It does make a little higher high. It pulls back, and then it makes a lower high right there. So that's the second entry counting off the lows, and it's like a breakout pullback long. And look how many times we tested across this former resistance, and it's acting as support now. 1, 2, 3, 4, 5, 6, 7, 8, 9 different bars tested it, and not a one could close below it. A few times they pushed below it, but not a one could close below it. So I like that one. Figuring we're going to come back and test this high anyway because that's your first break. and it does make a new high, then it pulls back, and where does it bounce again? Right there across that. So I like entering that one still. That's a big bullish bar. It's a really big bar, and I mean, this thing moved extremely quick here. Notice those bars don't overlap, so you may not have got in that trade. You probably would have had to at least use a limit order, and then I still don't know if you'd have got filled on that one or not. But I like entering there, just based on all the times that held across there. So today was not as difficult as yesterday, in my opinion. This played out pretty straight. Again, you got a two-tiered channel working down, a break, a new low, and we did make a new low here. It's only by a tick or so, and then we kind of had what looked like was just going to be a sideways more correction. It is trending up. As long as we're trending higher there, you don't want to be looking for a short, and even then we're almost going kind of sideways, and then but we break out and this thing just takes off. And that's what happens a lot of times on range days. You may not get a retest on some range days. And the reason being is that the support's too strong and people recognize what's going on and they're all trying to get in, make sure they don't get left out before it goes to the other side. And this thing not only goes to the other side, and what you might have wanted to do was measure this, assuming that this is probably a midline right here. So measuring the bigger range and looking for a measured move. And that would have put your target right there, and look where we went to. Exactly to there, and now we're turning down. So use these measured moves. They come in really handy. You don't want to trade on them alone, but they give you reasons to know. It gives you targets where prices are likely going if they continue in that direction. So if they can continue in that direction, it gives you a reason to stay with the trade, hang on to a runner, or to look for more entries, that kind of thing. So, and it's just amazing how well these work, and I mean, to the tick. And if it doesn't get to there and it starts going in the other direction, then that tells you something too. The market is weaker than it should be, and you're probably going to move along this. So just to give you an example, let's say this was our measured move and we only got to here, and then prices start selling off pretty hard. Well, we didn't get to that measured move. That's telling you something. So we're probably going much further to the downside than we were, than continue to the upside. So make sure you understand how these work. Because these measured moves are they're a very good tool in the toolbox. They're not something you trade on alone, but when you combine it with price action, it's just a great, certain tools in your toolbox, just like for, even a mechanic, you got something. I mean, if any of you have ever used your hands, if you don't have the right tool, something can be very difficult, and then suddenly you get the right tool, and it's the easiest job in the world. But you got to have the right tool. Well, this is just one of those tools that makes our trading easier. And that tool alone is not something you want to trade with, but it's just an additional asset that can help you keep you on the right side of the trade. So anyway, that's pretty much it for today. I hope everybody has a good trading day tomorrow. But most likely it'll be Monday before we have another chart lesson. So I'm going to wrap it up for today. But this is Mack with PriceActionTradingSystem.com, and we'll see you next time.